It's lunchtime. They ain't about to do nothing but fake moves. So it's a good time to show the orb right here.
So it's either about to fail that orb or not when they come back from lunch, it looks like.
So I'm thinking it's going to retest the orb and go back to the top.
Yeah.
You know, because they tried to get it. This is the lowest they could get on the orb all day right here. So this was your orb take right here. If you go on the 5-minute chart and you mark your first 3 candles, 1, 2, 3, or you can go to the 15-minute chart and mark your first candle. This is the top, this is the bottom. You can go to the 3-minute chart and mark your first 5. 1, 2, 3, 4, 5 candles. See, this is the bottom, the lowest of these candles right here. Zoom in a little bit. See the bottom right here, or top. These 2 candles both double tap this top. So that's heavy support. So if later on in the day it tests and we catch it from the bottom of the orb and we ride it to the top, we know that's heavy support. Right now it's on the way back up. So if you would have took the 1, 2, 3, 4, 5 candles on the 3-minute, that's the orb levels, and then you can go to the 1 minute. So now I go to the 1 minute and I wait for it to break. So it went up, failed. This was your put when it double top, 1 top, 2 top, 3 tops on the top of the orb. Huh. Let me put right there. I got low risk. Boom. It printed. Then it gets to the bottom orb and it starts to fail. You can size in right here once it gets below the orb right here. Boom. Then once it holds the orb, that's when you really go. And then now you're looking for your MACD to say I'm reversing. See right here, the MACD's got separation straight down. Once we get under 30, let's look at the levels. RSI, once it gets under 30 right here, it starts to get overbought. So now we're looking, boom, okay, let's see. This right here is saying that the momentum is about to go back up. And it wicked up, wicked down, and then boom, the momentum shot up. So it gives you 3 chances in this area to get out. 1, 2, 3, 4, 5 different times you could have got out of this trade, and this candle right here would have been your last exit. And the MACD is turning a little darker colors. Once it starts changing colors, that means it's done making this momentum move. This is the momentum candles. So now you can get out of this trade, and you would have took it from the top of the orb all the way here. That's 586 from 588. That's a $2 straight down, no hesitation on a 1-minute chart. Just print it. And then when you see this move is printing from the top, you don't want to jump in here or here or here, or you want to jump in here on this pullback candle, because you see the MACD is still trending down. You see that the RSI is under 50, so over 50 is bullish. So when we're up here and it starts dropping hard and then it gets to under 50, that is where you want to get in. And also you have a doji candle right there. So they tried to push it up, try to push it down, flat, opened up, closed right here. That's who won that candle, and they tried to get it back up and they couldn't. Hammer to the bottom. That means that it got bought up all the way back up here. Like Chris said, if you use this as 1 candle and you mark a halfway point, that's the exact point where it hit. So it couldn't get above that halfway point. So boom, bounce right off of that again. Then you get another doji right here. So like boom, I could get out that, wait, let it settle. So your orb, once it breaks the orb, it's going that way most of the time. And then it rolled the orb. So boom, retest. So when it double retests the orb, that's another entry. The bulls could not get this above this orb back-to-back 1-minute candles. So that's another put with our stop loss right here above. So we go to this candle, we go midway right here. So this would be our stop loss right there. You feel me? So now we buying another put in this range, not just right here, but our first buy is at the next top. Then if it goes a little bit more, we buy a little bit more, and then we can average in. And then if it doesn't hold, we get out. But it held, and we put it again. Now right here we get another double bottom. That's your stall. We want to trade the momentum. So once we get double bottoms, hey, Let's get out of there. Also, you see the MACD is giving you mixed signals. This hard sharp turn right here to the bottom, hard sharp turn back to the top, that was a fake out. So the MACD right here is saying it's under 50. So you don't want to take no calls right there under 50. It's more of a put under 50. So that's another indication, confluence of double top under 50, crossing down, put again. Then you double bottom. You can get out on the double bottom. You can get out on the reversal.
Okay.
And then up in this area, we just sideways. And it tests here again. When it fails, you could take another put. You could have rolled this put from here to here again. When it failed this level again, put. So we gotta, change our mindset from just put or call, and what is it failing? Is it failing the bottom of this again? It can't get higher, then that's a put again. And then boom, look what it did again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles tested bottom orb. 11 minutes in a row. They could not push it any higher. And the trend of the day is what? Below the orb. The trend of the day is sell-off. The S&P 500 is all green for so many days in a row. We have to sell off. And when it can't pass that, it's going down again. Boom. Easy money. So triple bottom. You can get out. Wait. 1, 2, 3, 4 candles right here wicking. Hey, it probably can't get any more. We're getting stalled out. Support. Ride it back up to the orb. Let's not buy in between levels. Let's buy the support and resistance levels of the day. What is the orb trend?
That's what I normally do.
And then once you get back right here, and it printed a candle right above the orb. So it tested, retested, wicked it. This is not the buy. This candle, 1 minute candle, is the buy when it held. It opened above the orb. So this is, on this candle, on this wick, the body, this is the open, this is the close. This is how far it ran up. This is the lowest it got. So when this one wicked over, that's not the buy, but when it held right here, that's the buy. And then you can ride it up here. And if you didn't get the right here buy, you don't FOMO in this zone, because now you're at the same level all the way over here. And now you're FOMOing out because it's going red. You probably went negative right here. So that's why you don't buy on this candle if you're not buying right here when it first holds the level. You can even buy a little early right here with your stop loss right here. If you buy in right here, your stop loss should be max right here at this bottom wick, which is also the 200 moving day average that has been bouncing off all week. So you take this and you got another nice trade all the way up. Easy money. MACD went straight up, everything went straight up. Then you get another double top. So what we do on that? Stall? Hey, put time. What does it do? Then we get another wick, doji. Get a hard doji right here. We get another doji. Okay, getting the hell. Oh, we getting action. What is that? Volume. Let's get in the call. Level 2's up. We pointing up. I just bought 1. Alright, that's a good little beginning or video for now.